Good afternoon, everyone. We're going to start. I'm Sara Pantuliano. I'm the Chief Executive at ODI, and I'm really delighted to be moderating this discussion today on remittances for recovery, a new era for digital money. Quite an important topic. So why are we talking about remittances? I mean, remittances are critical for reducing poverty. They're critical for development. They're even more critical in crisis because they are a stable, predictable source of income for many households. If you look at some of the statistics, some of the data out there, we can see that as a source of external financing, they actually dwarf overseas development assistance and foreign direct investment. The average in low and middle income countries, we just did a sample in ODI of about 33 low and middle income countries, remittances were about 10% of GDP. But actually, if you look at Somalia, they are 35% of GDP. Or in the Kyrgyz Republic, they're 31% of GDP, and so forth. And we see the remittances become even more important during crisis. So we've been tracking that during the pandemic when we have seen actually remittances going up. In Yemen, they've really kept people alive, literally. And I am sure we'll see that going up during, in Ukraine. So what is the problem? We'd say, great, it's a stable source of financing for people. Well, it costs a lot of money to remit money. There are many different ways to send money back, to the country of origin or wherever. But we see that, the World Bank has just estimated that to send them via a bank is about 10%. It costs 10.4%. You send them to the post office is 8.3. You use an MTO is 5.2. Even if you use a mobile operator, it's 3%. But if you use digital money, mobile money, GSMA estimates is just 1.7%. It's much, much cheaper. So why we're here to discuss? Because it's only 3% of all remittances globally that are sent via mobile money. So to discuss why this figure is so low and what are the obstacles to really increase, the ability to send money, through mobile money, we have a fantastic panel. I've got some, brilliant colleagues with me. They're going to tell you all about it. So I'll start to introduce Asif Salih, the Executive Director of BRAC Bangladesh. Next to him is Brad Garlinghouse, the CEO of Ripple, and then Jeremy Allaire, the Chairman and CEO of Circle Internet Financial. Before we delve into the discussion, do amplify our discussion online. Tweet, the best things that colleagues are going to say. Use the hashtag WEF22. Let's get the discussion going. So I'm going to ask all of you to reflect on why, what do you think, first of all, actually, remittances can do for recovery in the aftermath of the pandemic? We know that, as I said, remittances increase post-crisis. So what role do you think they're going to have, and how can the advancements as we have seen in digital money technology really support this use of remittances through mobile money? Brad, maybe I'll start with you.
Sure. Look, I agree with everything you just said, and the point that jumps out at me the most is in a moment of crisis, these are the kinds of money movements that are the most critical to a population that is most fragile. The WEF's motto is about improving the world, and I think it's almost a tragedy that the people who can least afford it are the ones paying the most. Looking at your data, we can say that the mobile wallet at 1.7% and celebrate that that's much, much, much better. But I would ask the question of why isn't it 17 basis points? Money today is ones and zeros. You can send an email to anywhere in the world for effectively nothing. Why is it even 1.7%? And I think the good news is we can get there. There are hurdles, and more so than anything else, I think the hurdles is the incumbency of existing players, and I mean that as relates to corporates as well as governments, who sometimes don't always have a shared incentive of what's in the best interest of those populations that might be most fragile and in most need of those, in a moment of crisis, funds from loved ones, home, what have you.
That is something we're going to discuss for the rest of the conversation. But Jeremy, do you want to add anything to this?
Sure, I'd be happy to. We got started in this space about 9 years ago, and the core belief was that as Brad really referenced, we've grown up with a world now where we can basically transmit data and information and communications instantly to any person anywhere at no cost. And we take that for granted. And so when there's people we need to engage with, that's freely available. And there's an internet architecture that made that possible. And so I think what got us excited about digital currency as a way to address this issue is the potential that we could get to a place where you could have a dollar that could be transacted and transmitted at internet scale to any person anywhere without permission on a peer-to-peer basis at effectively zero cost. And I think we're actually getting really close to that. There are a lot of these last mile issues. There are issues of whether people are mobile enabled or do they have to operate in a cash economy. So there's like these bridging of the kind of physical currency world and the digital currency world. That's a real barrier as well. But I think fundamentally, we are moving into a world where the concept of a cross-border payment will be as crazy sounding as the concept of a cross-border email. We don't think about cross-border emails. We don't think about having a cross-border web browsing session. It is absurd to think about that. And I believe we're on the cusp of that with money. And I think when it comes to remittances, I believe the concept of a remittance will also disappear because we don't think about a long-distance telephone call anymore. We have WhatsApp. Or whatever we have, and we just make a call, and it works peer-to-peer in a secure, private way with anyone in the world. Money will be the same. So that's what we're working towards. And then I think in terms of the theme of this discussion, I mean, the whole goal here is how can you raise global economic prosperity? How can you help people connect into economic activity more easily, more safely, more securely, and do that without the toll takers who are extracting a rent from them, as Brad said, from the members of society that most need every last penny, so to speak.
I agree with every word that you've spoken, but we need to understand what is preventing us from getting there. So I'll come back to you to reflect a bit more on that. But as if maybe you have done a lot in this space with BRAC. So do you want to share some examples of the best innovation that we've already seen in some of the low and middle income?
Yeah, absolutely. And just want to kind of pick up on what Brad said just now. That this is also a very fragile population paying the most amount of money, right? So that's a very important point because I think remittance and migration in general, the role it plays in development is very under-researched. And as, we have, in BRAC, we have a large program called migration because we know how important it is as part of the rural economy. In Bangladesh, I'll just give you one example. Close to pre-COVID, this is a pre-COVID term, close to 1 million people every year goes abroad. And these are mostly very poor families who are selling their land to go and find a job that doesn't pay enough, right? And then each taka or each rupee basically means a lot to them. And these are 1 million families every year that's dependent on this livelihood. We saw that during COVID time. People who were dependent on foreign resources in terms of remittance money, they were the most resilient. And also, at the same time, they were most affected as well because of the source country, particularly the oil-dependent Middle Eastern countries, they were badly affected. So I think we really need to look at it from that perspective, how we can create more opportunities in terms of to reduce the cost. We look at innovation from a three perspective. We call it the TCV model. Anything that reduces time for T, cost for C, and number of visits to a physical entity is an innovation. And by introducing technology, I think all of those three are in fact achieved when we do that remittance through digital means. BRAC, for example, worked with our organization to start a mobile financial service delivery and in 2011, and that called bKash, which is now one of the largest MFS in the world. And bKash actually started remittances in 2018, and now it's working with 73 operators across the world and from 70 countries sending money. So just to give you some numbers, in 2020, we transmitted through this channel about $138 million. In 2021, that number evolved into 286 million. Again, because of the TCV savings, I think people find it a lot easier to adopt to that technology, particularly around in the source country where the remittance money is coming from. And essentially, this means that anybody who has a mobile phone with an app are able to send the money, like Bradley said, that it should be as simple as that, and then that the money coming in to another phone holder, digital wallet. And during crisis time, during COVID time, it was so useful because people really suffered, and then that access to immediate money without going to somebody, because it's still very, very cash-intensive sector. I told you that about 280 million comes from bKash, but the total size of the portfolio in Bangladesh for remittance is about roughly $20 billion. So imagine what is the large amount of cash that is still out there in the sector.
Yeah. But as you say, the opportunities are incredible. Brad, what can businesses do to really help, push this agenda, particularly in low and middle income countries?
Well, so I mean, one is to make a bet about where the future is going. I actually think, and partly building on something Jeremy said, I think one of the hardest parts of actually solving this, and Jeremy, I think very correctly said the word without permission. And I think one of the things we lose sight of is I think there's a lot of businesses that have very compelling solutions. You're hearing about some of them here, but governments matter. And we live in a world of government controlled. The financial systems in G20 markets are regulated in that. I'm not even saying that's necessarily a bad thing or good thing. It just is. I don't think that's going to change in my lifetime. And one of the challenges, of course, here are core financial regulations like KYC, know your customer. And a regulator hears the expression without permission, they take a deep breath and they're like, wait a minute, no. If that's without permission, I need to know and make sure that that's not money laundering. I need to make sure that's not human trafficking. I need to make sure that's not drug X, Y, and Z. I need to make sure that's not terrorist financing. And I think, just regulatory frameworks are obviously there for a reason and to protect various aspects of society. But in this context, it actually is it's a point of friction that we should just be aware of. And I think if we try to proceed in a without permission, I worry that that we take one step forward, two steps back.
I think we got to the crux of the matter, because I think that is really the key issue. I wanted to elaborate, but maybe, Atif, you can tell us first, where do you think it's worked well? Because you have a lot of experience of doing that. Maybe you can share some of what the best, regulatory frameworks you've worked with are, best government, sort of business experiences that you have encountered.
I think in general, regulatory framework is very, very complex when it comes to money movement. Yeah. That needs a streamlining for sure. Because, essentially, the operators who are working, it's about, as Brad said, is reducing friction, and most of the friction actually comes from regulations. And I know there are some good reasons to have regulations there in place, but then there are also groups which are also protecting their own interest as well. So this is where I think it's really important that, as there's a lot of fintech companies which are coming up with interesting innovations, how do we kind of bring them as part of the ecosystem, the larger digital ecosystem as a whole? And this is where I think this whole licensing regime needs to be much more made transparent and easier for people to come into the market. Because I think the more the competition is, I think the better it benefits the consumers at the end of the process. And also the other thing I would say is that it's, as I was mentioning, that this cash is still the big time the king. And one of the biggest obstacle or barrier is at the destination country, the adoption rate. Because the more I think that there is a digital literacy element there, there is also an element of the more sort of ecosystem player comes in, the more people would like to adopt. So I think there needs to be a lot of work that needs to go into that space as well. So destination country popularizing digital wallets as a whole.
Yeah, no, absolutely. Jeremy.
A few thoughts to ladder on it. One of the important things to recognize is, cash is a really great product, right? People like cash. It's private, it's secure, it's a bearer instrument. It provides final settlement between you and a counterparty. And there's a reason that where cash is king, so to speak. And I think there's so much energy in the world aimed at taking away the features that make cash so powerful. There's a reason why people in countries around the world actually would prefer cash versus mobile money, because it gives them more self-sovereignty. It gives them more economic freedom. And so a lot of the policy and regulatory issues that limit the power of moving money have to do with stripping people of their economic freedoms. And so I think we've grown into a world on the internet where governments, for example, were terrified of the idea that people could use encrypted messaging, that it would strip away their ability to do law enforcement. But now we take it for granted. Everyone can have encrypted messaging. They can have private communication, and there are companies that defend that as a fundamental human right, and it matters to people for good and for bad. And I think we have to think about solving for these problems by building models that actually provide for forms of digital cash that have the features that make cash attractive to people. And I think on a global scale, if I can go to a corner store and buy a SIM card and put it in a phone, I can participate in the global internet and have communications and have an identity to communicate. That's possible for pretty much anyone, anywhere. Why can't I take that mobile identity and download a peer-to-peer digital currency wallet? There are hundreds of these today. And now be able to receive something like USDC. And I can receive that at no cost. And I can have a peer-to-peer transaction that is a digital cash transaction and do that and do that globally and interoperably. And so I think that there are models that can make this work. I think policymakers and regulators have to adapt to that, as opposed to trying to get everyone to adapt to their constraints. And you can take a risk-based approach here. Just like a mobile SIM is of certain use, you can take a risk-based approach. And if you start to want to interact with an identity that is doing a larger amount, then you might have other identity requirements that emerge. But we have to preserve digital cash. That has to work on the open internet. It has to work interoperably with anyone, anywhere. That's how we're going to solve this problem. And I think we're really close. I mean, USDC itself we've seen over $3.5 trillion of transactions directly on the internet between counterparties. And so if we can improve it with more scalable blockchain technologies like Brad's company provides, and we can make this extremely low cost to move, and then enable individuals with digital wallets that can interact, and you can scale into the risk, right, is the way I like to think of it. But at a base layer, if you want to solve for this problem, governments have to accept that people want digital cash. That is a product that they want. And from a remittance perspective, that's critical. If you want to educate someone and say, hey, you should do this digitally, they want to know, is this as good as cash? Can someone turn it off? Can they turn it off? Is it as good as what I get when I get cash? And I think we need to answer that question definitively as a society if we want to solve this remittance problem.
Absolutely. And just, you want to come back?
Well, on a philosophical basis, I agree with Jeremy, full stop. The thing to think about, I think, is if you approach the regulators with you need to adapt to us, I mean, that is dead on arrival. Like in my experience, and globally, and frankly, even here in Davos, meeting with financial regulators in all kinds of countries, I think we have to acknowledge, Ben Bernanke, the former head of the US Fed, came to one of Ripple's customer events, and one of the things he said is, countries will not give up their ability to control monetary supply. They will roll tanks into the streets first, because it's giving up sovereignty. Now, we could debate whether or not some countries at the longer tail ever had control of their money supply. But the G20, I think I agree with Jeremy that digital cash, cash is anonymous and private and all those things. But if you ever walk into the bank and ask to withdraw $20,000 of cash, they're going to ask you a lot of questions, at least in the United States and other G20 markets. And so what I think about is in terms of solving
that's a risk-based approach, right? It's sort of saying if you're going to have these bearer instruments of that scale, we need to know a lot more about you.
Yeah.
I think there is a role that we can all play to make sure that we have regulations, but more creative regulations that is more enabling. The forum is facilitating this digital currencies governance consortium, of which a number of us are a part. We released some white papers last summer that really stress, the importance of mobile money for financial inclusion. That is also something that governments want to see in their own societies because it is a way, to tackle poverty. And so I think collectively need to help shape that regulatory space in a way that is not too, sort of restrictive. As we're coming really quickly, I want to get the audience in as well.
Okay, I'll just give a very quick example because by adding these constraints, the one thing that government actually misses out on is that people actually, for convenience, go through the hawala system, which is the non-formal system and much more dangerous because there are other channels. And during COVID time, one very interesting thing happened. Government added 2% incentive in Bangladesh, and that dramatically increased money sending through official channels. So going digital actually will increase government's net sort of income of foreign resources, which is becoming very, very important right now in this economy.
Excellent point.
What I agree with both of these gentlemen is, I think where governments do need to it's less about adapting, more understanding. People think that digital currencies are somehow more, can circumvent. As Jeremy's described, digital currencies actually in many ways are more traceable and more trackable and more visible. And so in some ways, I think governments should actually like it better. But
we've seen people taking literally bags of cash to Pakistan when the space became more constrained to send, money back after the earthquake a few years ago.
Yeah.
So, let me come to the audience. Any questions? There is a mic somewhere. Come to you at the front first. Please say who you are.
Hi, I'm Trisha. I'm one of the founders and the CEO of Unit 21, an AML company. I wanted to ask a question about adoption, actually. Curious if you're seeing the adoption for hyperinflationary environments like Argentina be different from the US, which, although now inflation is really high, but typically, are you seeing adoption and usage vary?
And I'll just take a few and then we do one last round.
Yep.
Hi, my name is Atoka. I'm a global shapers from Japan. I work at a finance company, but I also run a school in Japan, and I'm also part of an education program lead for an NGO in Ghana. And specifically for my NGO, I wanted to ask, because we're trying to perhaps implement digital currency for doing microfinance. And I was wondering how would, I guess, someone from who's not knowledgeable too much about the digital currency world, how do we determine which digital currencies are reliable and also would be applicable in the near future?
Great. Any final question, gentleman at the back?
Yeah, my name is Bob Wardup. I'm at the University of Cambridge, and I do a lot of work in Cambridge Center for Alternative Finance, alternative systems and channels of finance. I'm wondering here, the issue of regulation constantly comes up. Is it a question of automating compliance processes, or is it about the regulation? Because, you've raced ahead in transaction volumes and sophistication in the services side. But frankly, reg tech hasn't kept up. And that's both in the supervisory capacity of regulators in terms of emergent consumer risks and being able to actually effectively supervise. But also, I look at these manual, fragmented, it's a mess inside, I guess, your firms. If I was to ask any one of you, do you fully understand your regulatory requirements in a given jurisdiction at a given point in time for the activities you're engaged in? Most financial organizations would kind of say, we're not sure. There's a huge lag there.
Excellent questions. Let me come back to you. We don't have a huge amount of time, but maybe I'll start with Jeremy.
Sure, I'll talk about a couple of pieces of this and yield to others. So just with something like USDC, I can try and answer two questions at once. So USDC is a dollar digital currency. It is regulated under banking supervision laws in the US. It's issued by Circle, which is a regulated financial institution, and it's fully reserved by in government bonds, US government treasuries, and cash. And so it is a reliable, durable, dollar digital currency that works on the public internet, and so it's the sort of fastest growing trusted dollar digital currency in the world. And so from the perspective of choosing something, it's a pretty good choice, I think. But it's also one of the only digital currencies that operates in a regulated context and was designed from the start to work that way. It's different than something like Bitcoin, which is not itself regulated, but it has the problem of price volatility, whereas USDC is just always a dollar. And then just to the other question, we're seeing a lot of adoption in emerging markets. We're seeing demand for these digital currency dollars, significant demand out of Latin America, Africa, Asia, other markets, because people want digital currency dollars, and they want to be able to hold them to store value. They want to be able to transact them because they can do that easily on the internet. And they're also able to take advantage of things like decentralized finance, which provides opportunities for borrowing and lending and other forms of financial services without being dependent on banks, by just conducting those transactions through open software on the internet. So we're definitely seeing that demand as well.
Thanks, Jeremy. Brad?
I agree with USDC is a great solution for one of the things you were talking about. And the Argentina question I thought was super interesting because I often will say, I usually call crypto digital assets, or I don't usually say cryptocurrency, because for all intents and purposes, I think mostly it's not a currency in the kind of consumer definition of that, except for kind of some of the tail risk around in Argentina or Zimbabwe, where those governments have lost control of their currency multiple times. And if you're a wealthy person living in one of the, or even a middle of the road person living in one of those countries, I'd rather not hold the currency as opposed to a digital asset and maybe a USDC or a more traditionally defined digital asset. I completely agree with the question around, is the automation, reg tech, if I were in the venture capital business, and to some degree, Ripple's invested in about 50 companies, so to some degree we are, I think reg tech is an underappreciated opportunity. The one risk, however, on that is that came to light as we work with a lot of banks around the world, is a bank saying to me, they won't accept another bank's KYC token, if you will. Just because you were KYC'd by one bank, you're going to get KYC'd by the bank you're sending to, because the risk of a bad KYC to the accepting bank is so high that they won't trust the other bank. That's one where it feels like, okay, maybe some of our regulatory frameworks could change, but I think you're right that reg tech's a huge investment opportunity.
Yeah, I mean, absolutely. I think the central bank regulators are known for risk taking. Let's put it this way. And then on the other hand, a few big banks who actually control some of these, they are extremely risk averse as well. So that there are plenty of punishment for not getting it right, but not enough reward. So this is why you need a lot of smaller players to come in and challenge these big organizations. And that's what we are seeing in Bangladesh as well. Thank you.
Brilliant. Sadly, we're almost at time. I just want to ask you one last super quick question, 30 seconds each. So next year, we are at WEF 23, hopefully in the summer again. Personal preference. What is the change you'd like to see? Wider, not just in your organization, the practical change that in a year's time we can work towards. Asif?
I think, in a sense, more adoption in the destination country. So there is a big gender gap as well in developing countries. So I want to reduce that. This is within my control. I want to get that aggressively to spread the beauty of digital money across. Thank you.
I think the number one thing, and certainly Jeremy won't be surprised to hear me say this, regulatory clarity, regulatory certainty. The U.S. is certainly behind other countries, but even some of the leading countries in this space, understanding how the businesses you operate in are going to be regulated by governments is critical to make investment as an entrepreneur, to start new companies. As a U.S. entrepreneur, when people ask me, they're thinking about starting a crypto company, I say don't incorporate in the United States, because that's where it's somewhere between hostile and uncertain. And there's much better clarity in Japan and Singapore, here in Switzerland, to invest. And I think globally having more clarity and more certainty will help this innovation thrive, and it'll help remittances because of that.
Absolutely. Jeremy?
Yeah, I feel like from at least the kind of crypto and blockchain industry, this promise of more efficient, more inclusive finance and delivery has been elusive. It's been something that this industry has been parroting and talking about for almost 10 years. And so what I'd like to see in a year is that we've really solved some of the fundamental problems with that. And there's, let's say 100 million people in the world who are using digital wallets that can be transacting on blockchains, that are doing it at the speed of the internet with extremely low cost, and that's working for people, that it's working for people on the ground, and that there's pieces that are needed, regulatory clarity is needed for that. There's on and off ramps, it needs to be connected into cash economies, other things. So there are pieces that are needed, but that's my hope. My hope is that a year from now, we can all sort of come to the table with more and more human examples of this really working for people.
Fantastic. Well, Asif, Brad, Jeremy, thank you so much for all your insights and your reflections. Really, really helpful. Thank you to all of you for participating, and hopefully in a year's time we will have made progress.
Thank you.